Good morning. Today is Friday, June 12th, 2020. Today we're going to look at the markets. If you haven't looked at DayTradeToWin.com, if you're new to trading, please take a look at the wealth of information that exists here on DayTradeToWin.com. We have a Getting Started page right here. You can come here to Get Started guide. We also have a few things that you could look at as far as if you want to download the news indicator. If you haven't done so already, you can come down here to free things and under downloads as well. And you can take a look at the NinjaTrader simulator that allows you to practice before you trade live, understand you have a good idea of what to do when the market is slow or fast, and then when you're ready, you can then go ahead and trade live. But really, we want you to practice before you jump into the markets. Remember, trading is a lot risky and it can be very profitable as well. So you should consult with a broker before trading live just to make sure that everything is clear. Mark, Sally, Payman, Poya, Vincent, Tony, Kev, Mark, John, Joe, Jeff, Jack, Gene, Eddie, Bob, Bill, Anto, Alex. So this is a live webinar. I'm not going to do anything pre-recorded. I want to show you the signals as they occur. I want to answer your questions. We have a new mentorship class beginning on the 22nd of June. So if you're interested in joining the next mentorship class, we try to make the classes small. Every Monday and Wednesday, 1 o'clock New York time, Eastern time. All the classes are recorded, and you can get all the information as well as the info packet if you visit DayTradeToWin.com and just go to the mentorship section here. Okay, so this is something that a lot of traders start off with, especially if you're new, because it's 8 weeks and it includes all the courses and all the software, even beyond the courses and the software that you see here, not just the scalping or the Atlas line or the ATO, but it includes so much more. So visit DayTradeToWin.com if you'd like to get some more information on that. So what we're going to do today is we're going to look at the Trade Scalper to start off and kind of give an understanding of what the market needs to do before going live. And I'm actually going to do this a little bit differently with this webinar. I'm going to put up 3 charts at the same time, and they're all going to be the Trade Scalper. And so the reason why I'm doing this is because I want to show you the versatility of using not just a minute chart and not just a range chart and not just a second chart. I want to show you all the signals that occur on these 3 charts using this one software, the Trade Scalper. So the versatility is that when the market is slow, you may not want to trade with a minute chart. You need something a little bit faster. So a range chart is perfect for when the market is slow, because as soon as you see a signal, you're able to get in long or to get in short. The 1-minute chart, when the market is more volatile, works out better. And I'm going to expand this out here a little bit, because when you see a signal to go long or to go short, you have an opportunity within that minute to place your trade, wait to be filled, and have an opportunity. And recently, we've been looking at a second chart because our students, they like to look at our software and apply it to their own methods. So if you look here at a second chart, I've gotten a lot of emails on traders who are using the Trade Scalper software. They use it on tick charts, they use it on volume charts, they use it on Renko, they use it on all these different type of charts. And actually things that I've never thought about using the software on as well, but they said they have great feedback and experience using this on a second chart. So what I've decided to do today is look at how we can apply the software to 3 charts and to see the signals that appear live as they occur. So for example, here on the minute chart, there was a signal to go short. And remember, this is all the E-mini S&P, but some traders are using oil, they're using NASDAQ, they're using the Dow, they're using currencies. You got to be careful with Forex because of the spread that can eat into that. So you have to be careful when it comes to Forex with scalping. I think Forex is more of a swing trade where you hold on to a signal. So we have here a signal go long on the range chart right over here, waiting for a signal on the second chart. Very good. Okay, so the other thing, thank you, Mark. The other thing that you have to be careful with is when you start looking at the markets, understanding if the market is slow or if the market is fast, it makes a big difference because you can see that the volatility right as the market opens here using the average true range is 5 points. This is really high. I mean, really high. I mean, the market is really volatile. So you may want to stay and avoid trading when the market is this volatile on a 5-minute chart or a 10-minute chart or a 1-minute chart. Even a 1-minute chart in this case is really volatile. So as a precaution, I tell everyone that if the average true range is between 4 ticks and 20 ticks, so that would be on the E-mini 1 point and 5 points, it would mean that you have to be within this area to trade. If it's above 5 points, I would say risky. You have a lot to lose. Stay away from it. Or go to, as you can see, I have here a 2-second chart or a range chart. So you have to be careful when the market is this volatile because the risk involved is very high. You're right. So to roll over, Bill, I wanted to show you how you rolled over here. One of the things that everyone is looking at now is a September contract. And I recently did a video and I released it on doing a rollover. So one of the things I wanted to cover today is those of you who are new, how to roll over from the June to the September contract. Then in September, roll over to December. So one of the things we're going to do, and it's okay if you're still trading the June contract, typically on the second Thursday or Friday of the expiring contract month, that's when we roll over. So the second Thursday or Friday of the expiring contract month. So this is the second Friday of the expiring contract month, time to roll over. So what we're going to do is we're going to go over to your control panel if you're using NinjaTrader. And we're going to go over here into not tools, not workspaces, connections. We're going to look at the database management. And then you're going to click over rollover. And it's a one-click opportunity to roll over. And once you do this, everything rolls over all at the same time. So it's that easy. So if you haven't watched the video on rolling over, there you have it. It's done. That's it. And now we click X and we're out of the way here. So the signals should be pretty much the same between June and September. There's not really much of a difference at this point. If you start trading into the next week, the volume, the volatility, and the liquidity gets slower and slower from June into September. So that's the reason why we try to roll over with everybody else between Thursday and Friday of the expiring contract month. All right. Mark, let me know if you're okay with that. Bill? All right. When you look at a signal here to go long, and we're using a 1-minute chart, look at the ATR. The ATR here indicates 4 points. So 4 points is within 1 and 5. Remember, we try to keep it within 1 point and 5 points, which is 4 ticks and 20 ticks. And so the expectation is the market is going to move about 16 ticks or 4 points. And this is just the E-mini S&P. Sometimes the market moves less than that. So when it comes to scalping, I want you to look at not taking the full ATR if it's this high, but looking at possibly 2 points or 3 points because there's a lot of movement there and every candle can move about, in this case now, about almost 4 points. Every candle from high to low can move 4 points. So if you're just taking 8 ticks or 10 ticks, it's more than enough to make the goal. Whenever you enter into a trade, always look at what's the potential and what's the risk as well. So I always take a look at this ATR on a minute chart to tell me what's the opportunity. So 30.7250 to go long. if you entered long here, or entered long here, or entered long here, if you're able to, the entry and the target, I don't think you should take more than 2 points based on the ATR because it's a quick scalp. You're not holding on to this for long periods of time. Let me just expand here the second chart to see if we have any signals that we could look at on the second chart. All right, just a short here earlier. All right, nothing yet. And the range chart, we don't use the ATR on the range chart. We use the ATR only on a time-based chart, minute, second, and so on, but not on a range chart because every candle is exactly 2 ticks. So we can't use an ATR on a range chart. So the question here, Poya says here, when a signal occurs and the bar is far ahead of the point, how many bars is it valid for? So typically, if you wait more than 5 minutes on a trade like this, I think it's over. I like to get in immediately, or the sooner it happens. Let me just forward that to everyone. So when you see a signal, for example, this 30.7250, and let's say that it just took off and ran away, you never got it. You hold on to that limit order or that market if touched order to get in. So here, 1, 2, 3 minutes later, you would have been filled, or 3 or 4 minutes later, which is a good amount of time to wait and to be filled, and then you were able to get in and get out. It's always better to get in sooner. So, for example, if the signal appears and an hour has gone by or half hour has gone by, it's too long. You have to get in immediately as soon as the signal appears. I would say within the 5-6 minutes is more than enough time to get in. All right, Poya? So on the range chart and on the second chart, both had short signals. Nothing on the 1 minute chart, but on the range chart and on the second chart. So if you look at this range chart here for a moment, the market is a little volatile here at 4 points, I would admit. And as soon as this signal appears, obviously sometimes it happens so fast and we're not paying attention that it runs away from us. So when this signal appears, don't chase the market. Take an order as a limit or as a market if touched and enter at 30.73 quarter as it occurs. Wait for the market to come back to fill you. If it doesn't come back and it just gets further and further away from you, then cancel the order. After 5 minutes, 4 minutes, if you haven't been filled, look for the next trade. So when you see a signal like this, I think the worst thing that you can do is just click market and get filled, for example, here unnecessarily. Wait for the signal to fill your order. Avoid slippage. Now, if it's within a tick, let's say instead of 30.73 quarter, you got 30.73, or you got 30.72.75 within 2 ticks. Well, the ATR is at almost 4 points here, which means that within a tick or two is fine. If the market is slow, let's say the ATR is at 4 ticks only, just 4 ticks, a slow market, 3 ticks, 4 ticks, and you don't get that exact price, and every tick matters because we don't have a lot to play with. But with this, under this volatility, if you get in within a tick or two, there's not a problem with getting the profit that you want within reason, but I wouldn't chase it. That's the most important thing, is not to chase the market with bad fills. The other thing that I get a lot is what happens if you have 2 trades in a row that fails? Well, it's going to happen. Obviously, not every trade is going to be a winning trade. If you have 2 trades in a row that fail, you should stop, pause for a moment, wait an hour, change markets. You shouldn't get back into it right away. Sometimes we have days that every single trade is a winning trade, and so I don't want you to get or look at this as if you're going to always have that situation where the market will continually just give you winning trade after winning trade after winning trade. You have to expect that at some point there's going to be a trade that fails. Now, when you look at stops and you look at how to manage the trade, very important, I think, is not to hold on to losing trades unnecessarily. So when you see the market go against you and you move your stops and you say, okay, I'm going to risk 2 points. Well, now I'm going to move my stop to 3 points. And now I'm going to move my stop to 4 points. That's really a bad thing to do. You shouldn't move your stops. You should try, when you get stopped out, and you recover. It's very important. Try not to move your stops and think it's going to turn around any minute, because that's a problem. All right. Now, when you look at news events,
If you want to learn more about trading, visit DayTradeToWin.com. Subscribe to the DayTradeToWin YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.